Well, good afternoon, everyone. Thank you so much for joining us in these unprecedented conditions. We hope you and your family are safe and healthy. My name is Brent Beardall. I am the President and CEO of Washington Federal Bank, and it is my privilege to serve as your moderator for today's discussion. This event is sponsored by 3 Pacific Northwest originals, the accounting firm of Bernstein and Porter, the law firm of Lane Powell, and WaFd Bank. We have over 6,000 participants, so it's clear there is a huge need for information here. And we've worked hard to provide what we think is relevant information for you as you navigate the ever-changing landscape that is the Paycheck Protection Program, affectionately known as PPP. Before we get started, we need to let you know that so many of the details associated with the PPP loans, PPP Loan Forgiveness is a moving target. We all wish it was set in stone, but it is not. The information that we will share with you is our best understanding as of today. And as many of you know, the SBA released just this morning yet another frequently asked question worksheet, which we will incorporate into this presentation. In all likelihood, the SBA will continue to provide more clarity in the coming days and weeks. We will intentionally not be using PowerPoint slides as we go through this webinar. Rather, our experts will be speaking directly to you, and the materials will be available on our website, wafdbank.com/forgiveness. With that, I am pleased to introduce our panel of PPP experts. First is Sarah Anderson, Assistant Counsel with WaFd Bank in Seattle. Next is Mr. Louis Horowitz, attorney with the law firm of Lane Powell in Seattle. Next is Mr. Eric Kudish, attorney with the law firm of Lane Powell in Portland, Oregon. And last is Mr. Greg Porter, founder of the accounting firm Bernstein Porter in Bellevue, Washington. And I would not be doing it justice, but to let everyone know that Greg is with us today on what is a very important birthday for him. So Greg, thank you for being here. With that, I would like to go somewhat off script and start not with a PPP loan forgiveness question, but a question about certification, the necessity certification. As most of you know, this is a retroactive certification that all PPP loan recipients are required to make about the needing of funds due to the impact of COVID. There is a safe harbor through tomorrow, May 14th, to repay the PPP funds, no harm, no foul, if you are not comfortable making the certification. Eric, would you talk to us a little bit about the new fact or the new question that came out this morning from the SBA as it relates to this certification and what is new and different about it that our audience should know?
Absolutely. Thank you so much. Essentially, the guidance we got today is allowing a lot of PPP loan borrowers to just breathe a sigh of relief because it reduces risks related to this uncertainty certification. As background, once the SBA started providing more guidance with FAQ 31 and FAQ 37 on the certification, our position has been that what the SBA Small Business Administration is mainly telling borrowers is take the certification seriously and undertake the type of due diligence you normally should for a transaction of this size. And in that due diligence, assess your business's current activity and other sources of liquidity that you have. We still think that is the case. That is what people should do, and they should make that certification in good faith. What today's guidance tells us is that for PPP loan borrowers with a loan of less than $2 million, they are deemed to have made the certification in good faith. Essentially, the SBA, as we read it, will not be challenging you, or will not be auditing that loan. And we kind of got a preview of that when the SBA previously said loans over $2 million would have an automatic audit. So they were clearly drawing a distinction between the two. And For PPP loans over 2 million or 2 million or more, there is no safe harbor, but what the SBA has given us is guidance saying that once they make a determination on their belief that there isn't adequate basis for the certification, keep in mind, adequate basis and bad faith would be two different standards. But if they determine you don't have adequate basis for making the uncertainty certification, you can at that point in time you can repay the loan in full with none of it being forgiven, and the SBA will not take any further actions against you. They will not do any referrals, and so that is giving you basically a second chance. If for those who decide not to return the money tomorrow, they'll be given a second chance to return the money with no consequences. Again, you need to make the certification in good faith, and you need to have the basis for that. It's just the risks of the SBA disagreeing with whether you made that certification in good faith or whether you had an adequate basis for the certification. Those risks have been significantly reduced by this FAQ, and we find that kind of a welcome relief given all the uncertainty people have.
Eric, indeed, thank you very much. It is welcome relief to have that certainty. I think probably 95+% of PPP recipients are under that $2 million threshold, and to not have to worry about that necessity certification, that is good news. But speaking to those that might be above that, Eric spoke a little bit. Greg, can you talk to us, if you were a business that had a PPP loan over $2 million, what would you be doing in terms of readying yourself to make the certification, and what will be needed in terms of documentation?
Yeah, I think just like, you hear the term location. In this case, it's going to be documentation. I believe that you should document both the quantitative and qualitative aspects of your certification. Quantitative ones would be taking a look at projections into the future in terms of best case, worst case, mid case, looking at your current financial statements as we work through this period. How are they being impacted? And in that regard, make sure that you are in fact recording in your financial statements the effects that your business is incurring as a result of the pandemic. For example, are your receivables still properly valued? Is your work in progress still properly valued? You want to make sure that those financial statements properly reflect what's going on when it is reviewed, at a later date. Look at what's your ability to, are there any limitations on your ability to use working capital, borrow additional funds? What are the significant risks to existing working capital, or if you take on new debt to fund the operations? What's been your plan for reducing staff and payroll costs to the extent that when those plans are put on hold, you're able to put them on hold because of the PPP money? And doing just general market threats, assessments, competition, maybe ranking your customers on a scale from 1 to 5 in terms of risk, and where do they lay, and how are they going to impact your business? But probably, the most important thing is we, in the Seattle area, we're the epicenter, really, of the pandemic in the United States, and businesses were closed much early, documenting all those decisions that were made, and just making sure you have a clean paper trail to provide to whoever those auditors or regulators may be.
Great, thank you very much. I think the clarity that came from the SBA this morning was much needed and much appreciated for both those under 2 million and those above 2 million. It seems like the SBA is going to give us all the benefit of the doubt, which is my understanding the intention of this bill, which is a good thing. Lewis, moving on to actual PPP loan forgiveness, we're going to spend the vast majority of today's call talking about the details, the nuances. Can you start us off at a high level and go through what you believe the understanding, the intent of the legislation was in relation to the PPP loans themselves and forgiveness.
Delighted to help. The legislative intent is a little difficult to discern here because this bill was enacted in a small, probably smoke-filled room with 4 or 5 people from each party and Secretary Mnuchin. So there is no legislative intent. There is no shortage of guidance in the form of tweets of what people think this legislation meant and what Congress people told people it meant. It was basically financial support for small and mid-sized businesses with a strong inducement to use those funds to keep people employed. It was designed based upon a European model to encourage people not to terminate or furlough their employees just because they had seen a slowdown in their business. And in that regard, I think it has been enormously successful. Many businesses, many clients that we have made the decision to keep people on payroll, to keep their compensation at a fairly consistent level, so that when we can return to work, it's easy to restart the engine. That was the broad general goal, and I think it has largely been successful, although there have been many people who have benefited from the program who would have remained open anyway because they are essential businesses, or they were able to move their workforce online because they're knowledge businesses. But that's fine. It was a broad brush a policy objective, and I think it achieved that objective.
Very much so. Thank you. Yeah, I think it's clear, while we don't know specifically that who's had what intention, the entire point of this was to keep our employees employed, so they would not have to go into the roles of unemployed. So keep our employees employed for the 8 weeks following, and we'll talk more about the 8 weeks, and then we can get some additional cost and some additional forgiveness. Let's get into the specific mechanics. Greg, if you wouldn't mind talking us through the mechanics of how forgiveness works. Clearly the participants on this call today all have received or are about to receive their PPP funds. What are the mechanics of forgiveness itself?
I think the first thing to understand is the difference between what you're required to use the PPP funds for versus how you apply for forgiveness and what counts or doesn't count in that regard. The types of expenses are very similar, but you need to understand the PPP loan proceeds need to be used for those qualified expenses between February 15th, 2020 and June 30, 2020. So making sure that you're using the loan proceeds for the purpose for which they were given and you certified. After that, then when you get into the issue of forgiveness, they're going to look at an 8-week period, which begins on the date that you receive your PPP loan or first installment of your PPP loan, and then it ends on the last day, 8 weeks subsequent to that. So, for instance, if you were funded on a Wednesday, 8 weeks later, it'd be that Tuesday would be the day that 8-week period would end. A lot of people believe you start Wednesday and you end on Wednesday, and that could be a critical mistake if you were trying to make payments on that last Wednesday that don't count within that 8-week period, and they don't. So that's an important concept. The other thing is that there's 3 things that can reduce the amount of forgiveness. One is not incurring the amount of qualified expenses up to the amount of the loan. So to the extent you don't have those, and I'll review those in a second, but to the extent you don't have those, that will reduce your forgiveness amount. To the extent you have a head count reduction in employees, that is going to also reduce your forgiveness calculation. And to the extent that you have wage reductions that meet certain qualifications, that also is going to reduce the forgiveness amount. So I call it kind of the trifecta. So the fact that, most likely, I would imagine if you do the math, most likely most people aren't going to be able to obtain full forgiveness based on the calculation that you went into the loan and the calculation you come out of the loan with. But that remains to be seen. So what are the costs that you need to incur for forgiveness? Obviously, it's the payroll costs is the huge one. That's going to include wages, salary, commission, tips, to the extent that doesn't exceed $100,000 a year. So you prorate that for an 8-week period that would be your maximum amount. In addition, that'd be vacation, parental, family, medical leave, dismissal, separation payments, and then also payments for group health care, insurance premiums, retirement benefits, employer, state, and local compensation. So those would be included in that payroll type cost. The non-payroll costs, which by the way can't exceed 25% of the total, are interest expense on mortgages that were incurred before February 15th, 2020, rent under a lease that was in place or enforced before February 15th, 2020, and utilities for which service began prior to February 15th, 2020. And then we're getting a lot of questions on what is rent, what are utilities. We can drill down on those a little bit, but just I guess one point I want to make sure is that people understand is when they think of rent, they usually think of their facilities rent, whether it be an office building or a warehouse. But rent is rent. Rent would also include rent that you would have on equipment. It could be equipment that's out in the field. It could be office equipment. We have a lot of architects and engineers that have a lot of very expensive office equipment that they rent. So as long as those leases are in place prior to February 15th, those types of things would count as well. You want to make sure you capture as many costs as you possibly can in the calculation. The same would apply for utilities, electric, gas, water, transportation, telephone. Do cell phones count? We believe at this point they do, unless we get additional guidance on that. So trying to capture all those expenses to make sure that bucket's full as much as possible. And then just quickly with respect to the headcount reduction, I won't go through all the periods and everything, but the bottom line is if you had 40 employees and you're down to 20, the amount of leftover forgiveness is going to be reduced by 50%. And then if you have wage reductions for people that make under $100,000, to the extent you reduce their pay by more than by the 25%, that overage, that additional reduction is also going to reduce the forgiveness amount. Now there is the opportunity to restore both the headcount and the wage reduction calculation if there is a cure that's put in place by June 30th, 2020. But that's kind of it in a nutshell.
Great. You covered a lot of ground there. Thank you very much. And we'll go into some of those topics in detail. Now, Sarah, as we're looking at it, there's really two different interested parties. We have the recipient, the small business recipient of the PPP loan itself, and then we have the originating bank. Can you talk to us a little bit about the roles and the responsibilities as it relates to forgiveness for both the PPP recipient and the originating bank of the PPP loan?
Yeah, absolutely. That's exactly right. So as we know, the purpose of the legislation is really to get the money in the hands of the borrowers to keep employees on payroll and off of unemployment. Banks are serving as the middleman in processing loan applications, dispersing funds, and processing applications for loan forgiveness. So from the time of approving a borrower's loan application, the bank then has 10 days to disperse those funds. Once the funds are dispersed, the borrower's 8-week period begins for which loan funds are to be used and the actual amount of loan forgiveness is to be calculated. The borrower really needs to focus on using loan funds on their payroll costs and other forgivable costs like what Greg just went over, such as rent, mortgage interest, and utilities. A minimum of 75% of loan funds must go towards payroll costs in order to achieve maximum loan forgiveness. Again, that's a minimum. You can certainly spend more than 75% on payroll costs. The primary goal of the loan program is to ensure that payroll costs are maintained during this period of economic uncertainty. Borrowers also need to focus on maintaining their FTE headcount. The headcount needs to be where it was for purposes of calculating the loan amount. So if the FTE headcount has decreased due to past layoffs, furloughs, or other attrition, the borrower needs to restore the FTE to where it was by the end of the 8-week period. The borrower is also responsible for documenting use of loan funds and should demonstrate that the funds went towards payroll costs and other forgivable costs. If a borrower cannot do this or misuses funds, those funds will be expected to be repaid. So then at the end of the 8-week period, the borrower has up to 90 days to apply for loan forgiveness. The borrower can submit its application for loan forgiveness to its lender along with supporting documentation. And then once the lender receives that documentation in the application for loan forgiveness, they have 60 days to process the application for loan forgiveness.
Great. Thank you so much, Sarah. So you really, the 8 weeks starts when you get the funds yourself, and then you have the 8 weeks to use those funds for the payroll and the other related costs. And then you have a time period after that to apply for forgiveness. Now, it's one of my favorite things to be able to do, to put an attorney on the hot seat, and I am happy to do that to Eric with this next question. There's been a lot of talk about this 8 weeks, and is it cash or accrual basis? I know we have a lot of accountants on the phone today. The question is it the actual cash paid out the door during the period, or is it the expenses accrued? Also, how can cash bonuses be factored in during this 8-week period? Eric, can you try to shed some light on those questions for us?
The pay versus accrual is got to be the biggest issue for which there's ambiguity in the law, for which we don't have any guidance. And it affects everyone, and it is something that is just still unclear. Hopefully the SBA will provide us an FAQ directly on point. What I can say is that in the law, it does say that the forgiveness is based on payments made and costs incurred during the 8-week period. And then as a legal matter, the question really becomes, does and mean and, or does it mean or? That is this disjunctive or conjunctive? And there are plenty of examples of times when and actually means or, so that it could be a payment made or a cost incurred. My hope is that the SBA will treat it as disjunctive, that you have to have either, and there's basis in the law for that I won't get into. I think the key is when you come to the payroll costs, no one's pay periods are going to align perfectly with that 8-week period they have, which basically means the first paycheck you make during the 8-week period will cover a period before the 8 weeks, and your 8-week period will end in the middle of a pay period. And so what I'm hoping is that for that first paycheck, it's a payment made in the 8-week period, and the borrower will get full credit. Not to get into the math, but because 8 weeks is actually just under 75% of the 2.5 months used for calculating the loan, for an employer who has no cut in headcount or compensation, they won't get to the 75% unless you give them that cushion of the payment for work done before the pay period. When we get the 8-week period, and when we get to the end of the 8-week period, there's going to be a choice of either you give people the credit for the cost incurred as of that date, essentially the amount they'd have to pay all of their employees if they ceased working for the company. Either you have to give them credit for that cost incurred, or you're essentially going to force every PPP loan recipient to run an additional payroll, cut more paychecks in the middle of a period. And for those who have dealt with trying to do payroll, it's a difficult process, even on the regular schedule we all have. Given that this loan is for small businesses, many of which will not have payroll companies that can do that check, and given today's guidance, the safe harbor for loans under 2 million, and the percentage, how many of these loans are in that, I'm optimistic that that the SBA will realize that you can't impose that additional burden, and so they will get the benefit of it is either a cost incurred during the 8-week period or a payment made, so you get both accrual and cash basis. With respect to bonuses, that's another area that we just don't have guidance. I mean, the bonuses that were paid in 2019 factored into the average payroll cost you use for the loan. So logically, bonuses should be able to count towards the payroll costs. Now, remember, Bonuses are cash compensation, so they're subject to the $100,000 annual cap, or for the 8-week period, $15,384. So here, if you accelerate a bonus or you pay a special bonus during the 8-week period, you only get forgiveness credit to the extent you're paying that to an employee who is making less than $100,000 a year. And I think that is going to bring a lot of, you make it a lot easier for the SBA to give you full credit for the bonuses you gave, because just politically, you're not, people are not going to be as upset about someone who makes, $40,000, $50,000, or $60,000 getting a little more than, say, the highly compensated executive who's making over $200,000 or $300,000. That said, it's entirely possible that the SBA for bonuses comes in and requires you to take the amount that was a bonus and then kind of allocate it throughout the year and then determine the amount that comes into the 8 weeks. My hope is that is just too much complication. As the SBA said in the guidance this morning, they don't necessarily have the resources to kind of be checking all these numbers. I don't think they'll be inclined to push that onto the banks, who would then have to check all of this. It just adds too much complexity. So I'm thinking if you pay a bonus during the 8 weeks, you get the credit for it. And as I said, the safety valve on this to make sure it's not abused is you can only get forgiveness to the extent that it's for an employee who otherwise is making under $100,000 a year in cash compensation.
Eric, thank you so much. That's the most clarity I've had on that question. And I think it's absolutely right in that accrual basis will generally be what is used. It's incurred during the period, but to the extent it can also be documented through what is paid, and you have that, the better off you are. Speaking of that, Mr. Greg Porter, from a books and a records standpoint, what should companies be doing today to document what they've done with the PPP money for forgiveness calculations? We've even heard some and go so far as to encourage that the PPP loan funds should be kept in a separate bank account. What advice do you have for small businesses?
I believe that the forgiveness calculation and documentation is going to be very similar to how you applied for the loan in the first place, proving your payroll expenses, tracking them through a payroll provider into your bank account, all these expenses through invoices back to your bank account, and keeping in files all the documentation associated with the forgivable costs. Again, tracing them right back to a bank account, because bank accounts don't lie. With respect to starting a additional bank account to house those PPP loan funds, we believe that that's best practice. It's certainly not a requirement, but we believe in a belt and suspenders approach to this forgiveness documentation. One being what I mentioned earlier, documented as you went into the loan, coming out of the loan. But two, setting up that separate bank account and then tracking costs as you go. And probably like every payroll period, you're going to make a draw against that bank account, basically to yourself, and move funds from that PPP bank account into your general funds bank account by virtue of an internal invoice that would lay out, here's our payroll costs, here's our interest costs, here's our rent costs, here's our utility costs that were incurred, again, making sure you don't go over 25% on a rolling basis, and then creating an internal invoice and then transferring the money as you go. That's a pretty good record of not only use of funds, but ability to calculate forgiveness. And again, it's a belt and suspenders thing. I've actually seen clients actually provide that invoice to their banker.
Let's not get carried away. Documentation to bankers. It's a great idea to have your different expenses and tie those to the bank accounts. Build that package, but it's a familiar theme: documentation. And if you have your support tied out to documentation, I think you're generally going to be in a very good shape. Sarah, let's talk a little bit about the confusion that exists out there about what happens with FTE count if it goes down during the 8-week period. Some have referred to this as a double penalty because in all likelihood, your payroll dollars will have gone down and your FTE count will have gone down. Will, in fact, the SBA be so punitive in the forgiveness calculation that you'll be penalized twice for the same thing?
Yeah, thanks, Brent. So unfortunately, the way the rule is currently written, it looks like the amount of loan forgiveness may be reduced due to both a decrease in actual payroll costs as well as a decrease in FTE headcount. So yes, employers can essentially be double penalized. This may change if the SBA issues additional guidance, but for right now, we know that if an employer fails to meet that 75% threshold that we keep talking about for payroll costs, the maximum amount of their loan forgiveness can be reduced. Or will be reduced, I should say. One point to make on that 75% threshold, I've seen a question come in. It's a minimum 75%, so of course you can go ahead and exceed that. It's also not calculated on an employee by employee basis. It's your overall aggregate payroll costs that are based on that loan amount. So additionally, if the FTE headcount goes down, the maximum forgivable loan amount will be reduced by the ratio of the new FTE headcount to the old FTE headcount. Something to note on FTE headcount, the amount of FTEs will be calculated at the end of the 8-week period. It's a snapshot in time, not an average over the course of the 8-week period. So there are still some outstanding questions on how that will work. Hopefully the SBA will publish additional guidance on that point, but as of right now, it's just the end of the 8-week period. I also just want to direct people back to the link that's included with this presentation. That will take you to our website, the WaFd website, that has a loan forgiveness calculator where borrowers can estimate the amount of their eligible loan forgiveness, and that's a really great resource.
That is great, and thank you, Sarah, for answering that for us. Louis, as we talk about the ramifications of what's happening with the PPP loans and repayment, and also the unprecedented surge in unemployment benefits, we've heard from a lot of small businesses, and this has been covered extensively in the press, that they're trying to hire back their workers, and the workers simply aren't interested in coming back to work. If that's a situation for our clients that are on this call today, what advice do you have for them? What can they do if their employees simply refuse to come back to work? Does that mean they're simply out of luck in terms of getting forgiveness for those dollars?
No, it is an excellent question, and it's a very real problem, although I'm unclear as to the extent to which the anecdotes about employees being unwilling to come back to work matches the actual statistics. But there are many reasons why employees won't come back to work even if offered employment, particularly your minimum wage and lower income employees. One is very much the enhanced unemployment benefits. For many at the lower end of the economic spectrum, they are making more money staying at home, collecting unemployment. Second is for some a very real risk and fear of infection. They don't feel comfortable going out into the world yet for obvious reasons. And a third issue is childcare. Many people now, their kids are home from school, and their normal childcare arrangements have deteriorated. So there are many reasons why people won't come back to work even if offered a job. As Sarah explained, there's two ways that forgiveness is cut back. The first is if your payroll drops, and the second is if your FTE drops. Your payroll is going to drop if you don't rehire those employees. So you definitely have that first hit. But there's a special FAQ, it's number 40, that says if you offer an employee work and they turn you down and they refuse to come back to work for any reason, you get to count that person in your FTE count if you document that you made the offer on comparable terms and comparable hours, and they turned you down. And there's also a little comment in there, a little threat where the SBA and the Treasury Department warn employees that they should be aware that if they turn down employment, it could impact their employment benefits. And I find that interesting because while that is true under normal circumstances, it's not true with respect to the enhanced unemployment benefits that the federal government gives. And most states are waiving a requirement that unemployed individuals search for jobs. So I'm not confident that any employees who turn down jobs are really adversely affected by turning down their job, but that provision is in the warning.
And Louis, that is great news that employers do have an opportunity to be able to still get forgiveness of those funds, but it's back to documentation, that we need to have the documentation that an offer was made and the employee did in fact turn that down. When we went through the calculation of the original PPP loan amount, there was a lot of confusion about the $100,000 limitation and what that applies to, if that's just base salary or if that includes benefits. Eric, as we start to look at the forgiveness, talk to us about, you know, that confusion. Where does that line get drawn for the $100,000? Is it inclusive of benefits? Is it inclusive of bonuses? How should companies be thinking about that going into forgiveness?
Yeah, no, that is an excellent question. This is one, unlike the previous question you asked me, where I can say there's direct guidance from the statute. The forgiveness portion of the CARES Act, which is Section 1106, it specifically defines payroll costs by reference to the definition of payroll costs for the application portion of the statute, which is Section 1102. And so payroll costs for forgiveness have the exact same meaning according to the statute as they do, as payroll costs does when businesses were applying for the loan. And so given that, it's my expectation that the same definition applies. And the SBA was very helpful and very clear in saying that the $100,000 limitation applies only to cash compensation, and it doesn't apply to non-cash benefits such as retirement benefits paid by the employer and healthcare costs paid by the employer. And so that should apply also in the 8-week period. It's also, as a practical matter, the only way you get to the 75% that the SBA is expecting you to pay on payroll costs is for payroll costs to mean the same thing when you applied for the loan as they mean when you're spending the money to get forgiveness. So I think it's going to be cash compensation is capped at the $100,000 per year, which again is $15,384 during the 8-week period. But then on top of that, you can get forgiveness for benefits that you pay, non-cash benefits you pay during the 8 weeks. Healthcare and retirement are the ones that have been given to us. Also, the state. Any kind of state or local taxes you have to pay that are imposed on wages, those are part of the payroll costs for the application, so they should be part of the payroll costs for forgiveness. And so I think the two will match.
You know, that's a great point, Eric, and I think a lot of people are overlooking those taxes that are paid that could be included in your forgiveness calculation. So thank you for bringing that up. You know, as we went through the PPP application process for new loans, the guidance was very slow in coming for sole proprietors. But we have a lot of the small businesses that are sole proprietors. Sarah, can you talk to us a little bit about how you would recommend a small or a sole proprietor document their payroll costs? What are the other eligible costs for sole proprietors that may be different from other businesses?
Yeah, so all costs that are forgivable for small businesses are also forgivable for sole proprietors and independent contractors. So again, we're talking about rent, mortgage interest, utilities. We keep talking about this 8-week period and the costs incurred through the 8-week period. So some sole proprietors may pay themselves on a different payroll schedule than what we're used to seeing with many small businesses. And in that way, sole proprietors may have a little bit of an advantage because it could be an easier payroll processing time for them. So I would say definitely make sure that you are paying yourself by the end of that 8 weeks to fully capture all of your payroll costs. Keep records of, we keep talking documentation. So keep records of how you're paying yourself, either if that's through bank records or other records kept in the ordinary course of business. Also keep records of payments made towards your rent or mortgage interest or utilities. If that's your cell phone, as Greg discussed, that may be something that's eligible to go towards your loan forgiveness. And then we do have, again, some additional information on the WaFd PPP Forgiveness webpage.
Great. Thank you so much, Sarah. There has been a lot of articles, Greg, about the taxation standpoint, the impact of PPP loans and PPP potential forgiveness on taxation. And can you talk us through what we know about what the expenses will be deductible versus non-deductible, how the PPP funds will be treated if it's a loan and then if it's forgiven? There's a lot of potential ramifications here. Talk us through what we know at this point.
I'm happy to. The first thing you learn the first day in tax school is Code Section 61 of the Internal Revenue Code. The gross income is defined as all income from whatever source derived unless specifically excluded by the code. Examples of exclusions would be state municipal bond interest, life insurance proceeds, potentially to an extent that you had your debt on your principal mortgage, the principal mortgage debt reduced. Those types of things have specific exclusions in the code. And with the PPP legislation, we have another one, and that's the forgiveness of the PPP loan. So we know that the forgiveness is specifically excluded. But now the IRS has come behind them and said, hey, there's another little code section and tax law that says to the extent you have that you incur expenses that generate tax exempt income, you can't deduct those expenses. So for instance, if you borrowed money to buy key person life insurance inside your company, and those life insurance proceeds are tax exempt when if somebody passes away, and therefore that interest expense isn't deductible. So they've taken that scheme and applied it to the PPP expenses, saying those expenses, to the extent that you incur them during that 8-week period, and they're forgiven vis-a-vis the 8-week proviso, we're not going to let you deduct those. And they published a notice that said just in fact that. I personally believe they had to say that just so they could clarify their position out of the gate and put pressure back on the Treasury, SBA, Congress to update the law to provide that those expenses are in fact deductible in accordance with the intent, whosever intent that may have been, whether it was Mnuchin's or whoever, but it was clear that the intent was this wasn't supposed to have a tax impact to you. And there's a bill working its way through the Senate right now to fix this, and we'll see how far that gets.
Great, thank you. Yes, so you cannot have your cake and eat it too, would be my synopsis of that, at least to this point, but we shall see. Going from the details, minutia, if you will, into more bigger picture, Louis, as we look at this, as you advise your clients and as we're providing advice to these small businesses that are listening to us today, what advice do you have for strategies to maximize forgiveness? And a lot of people, there's a cottage industry out there of people that are going to be auditing or reviewing, or forgiveness calculations similar to tax returns. Would you suggest that people use third parties to validate their submissions before they're turned into their banks? So
let me unpack that, because there are two questions really there, both very good ones. The first is how do you maximize forgiveness? My strong recommendation is conduct your business in a business-like way, making the same decisions you would always make, at least until the SBA and the Treasury Department provide us with additional guidance. It may well be possible to front load your bonus, but I wouldn't do that now. If you were normally going to pay a bonus to your employees, for example, many people are paying bonuses. We're not calling them hazard pay, but we're paying bonuses to people that are coming up and showing up at the office when many people are staying home. Many employers are offering those employees an additional hourly premium. That I think is perfectly fine. It's an ordinary course expense, and the employers are going to offer it anyway. But I think the people that are going to get in trouble here are the people who game the system, the people who try to accelerate bonuses or put their kids on their payroll. Any of that I think is inappropriate. And all of this advice may change when the SBA finally tells us about how to compute your forgiveness with greater clarity. I think part of the reason that the SBA hasn't given out guidance yet is because there is a political effort to change the 8-week period from the 8 weeks beginning the day you got your loan to 8 weeks about the same time, so that everybody can fold in, because everybody has the same problem figuring out, their payroll period, which is being straddled by the 8-week period. So I think there's going to be administrative guidance or legislation that makes the computation a lot easier. And I say that because that goes to the question about having a third party audit your forgiveness computations. I think it a lot depends on who the borrower is and their own internal controls and accounting systems. If you're not sure, or you're taking a very aggressive position, then yes, have a third party audit you and approve it. But this program was intended to be easy. And except for the paid or accrued issue that Eric Kodesh did a good job of describing earlier, I think most of us are going to be able to, by the time it's necessary to calculate your forgiveness, most of us are going to be able to do it with a pretty high degree of accuracy and thereby eliminate the need for a third-party auditor. That's my hope, at least.
I think that's all of our hope. And wouldn't it be nice if we got clarity? And one of the things we have going for us now is we have more time before the forgiveness calculations have to be made. And if this morning's any indication, we're moving in that direction, and maybe we get there sooner rather than later. Big picture before we go to some of the questions that have been submitted to us, Eric, and I'll throw this last question to you. What is it that we do not know at this point? If you could have a direct line to the SBA and ask them some specific questions that would be helpful to you and to our borrowers, what would the clarification be that you would ask the SBA for?
So, Brent, great question. I'm glad you saved it towards the end, because if we had put it at the beginning, we would have spent the entire webinar talking about the information we don't have at this point and what we need. So rather than do that, I'll distill it down to, I think, thinking about this, I think there are 4 things. First, the payments made versus cost incurred. This is the crucial issue that everyone is facing, both for payroll costs and for for rent, mortgage interest, or and utilities. It gets into the question of, can you prepay your rent if you were delinquent in your rent and now you pay it during the 8-week period, but it's for a prior period. We really do need guidance on payments made versus costs incurred, not just for the payroll costs I discussed before, but for the other forgivable costs. The other big one, and Lewis touched on it because we won't know it until we finally get more guidance on forgiveness, is how are you going to substantiate? I mean, as Greg has been pointing out, I mean, documentation, but what is that documentation? It was relatively easy for the application because, it was basic, mainly wages, and everyone had their 941s, their payroll tax forms filed for 2019 by the time we started this. What do you need to substantiate really becomes a big issue for the non-wage payroll costs that we have for sole proprietors and for partners. I mean, in the guidance, you're able to get the loan based on information on your 2019 tax return, which was already a difficult issue because of the delayed due date. But how are you going to substantiate what a sole proprietor makes or a partner makes? It'd be really helpful to get that. I'd also wish we could get more guidance on non-cash benefits. We know they're not subject to the $100,000 cap, but they've told us that premiums for health insurance paid by the employer are non-cash benefits. Well, does that also include HSA contributions by the employer? I mean, I've been assuming yes, that kind of goes hand in hand with the premium payments, but I wish that the guidance would be more explicit about it. I also wish that the SBA would give us other types of non-cash benefits or other types of benefits that it believes are non-cash benefits to the employees, because they've only given us those two. And the final one, and this is really more for borrowers with affiliates that have employees outside the United States. In a couple of places, the SBA, when discussing the employee count for eligibility, it's referred to counting your employees without the qualifier that we're only looking at employees residing in the United States. I mean, that is clearly in the interim final regulation, but the FAQs just don't repeat it. And so I want to know that when they're writing about employees for eligibility, they are including that qualifier that we're only looking at employees who reside in the United States. I mean, I think those are some of the key ones. There are obviously more, and I'm sure with all the people on this who are participating, there are other things they want guidance from the SBA on. I mean, ultimately, I think there's more we don't know than what we do know.
No, absolutely. And I have no doubt that more guidance will be forthcoming. What I want to do is the bank is reassure everyone on this call that we are all in this together. I wish we had a hotline to the SBA that we could call and get direct information. But what we know is what you know. And we believe firmly that knowledge is power. And that is why we're doing this webinar today. You will continue to see updates from us and our great partners at Bernstein Porter and Lane Powell on our website, specifically about forgiveness. And we want to do everything possible to allow you to maximize your forgiveness, because that's what we believe the intention was of the law. But we need to be able to do that within the rules and the regulations. So we will provide the templates as we know them as soon as possible. In fact, templates are up even today. But in all likelihood, those will change and evolve as the SBA puts out further guidance for us. But with that, I think as we've looked at the questions in the chat, we have answered most of the questions. I think we're just about 5 minutes before our allotted time. So I will just say thank you to everyone who has joined this webinar today. And specifically, thank you very much to our panelists, Sarah, Louis, Greg, and Eric. I think it's been very, very informative. And to the extent that we get more information, we may well follow up with another webinar. Thank you for joining us today. Stay safe and have a great rest of your day. Bye.